Hello and welcome back to Coinscrum Markets. I'm thrilled to be joined again by Anton Golub, founder at Flovtec. Good to see you, Anton.
Likewise, Paul, great to be in touch again on the way up as the bull run is evolving. I couldn't be happier to talk to you again, you know.
Well, it always keeps you happy when prices are high. We've definitely noticed that. Well, I guess most people happy. Yeah, we're just here to look back on some of the news over the last week and get your thoughts on the weekend. Should we just kick off and given you're glued to the screens at the trading desk at Flovtec, what's been standing out to you over the last week or so in terms of price action? Obviously, we've seen the firmness in prices remain, but what tokens have been standing out to you in particular?
Yeah, so definitely, I mean, the bull run is very much characterized by Bitcoin going up quite a lot. And we hit the 50K mark again, for the second time. And we see a lot of bullishness, especially on the institutional side. I mean, the retail is still a bit out, but they will come back as the prices evolve. But a lot of bullishness on the institutional side. For Bitcoin, I think the turning point for Ethereum happened recently, where actually the burn mechanism was implemented. And actually, if you kind of now recall that, I think yesterday was the first day ever that Ethereum actually had a deflationary aspect, meaning the amount of coins that were minted minus the burn actually was net negative actually. So it was a huge milestone. I think the price didn't really reflect that much, but we will reflect it very soon. And then the third thing that's very, very exciting is Cardano or ADA, which is now slowly flying towards $3. I think the catalyst for this was actually that they finally released the smart contract functionality, and a lot of high profile projects, that were already in the back, building for quite a long time are going to go live. I can flag one, World Mobile, that just did a very big crowdfunding, and a lot of DEXs that are going to pop out very soon to facilitate all of the trading of these tokens on Cardano. I think that's going to be a huge catalyst because ADA and Cardano are one of the favorites in the crypto industry, definitely, and definitely in the retail community as well.
Yeah, well, they're going to have a lot to prove, given I guess this is all coinciding with the release of their smart contracting language. Is obviously going to enable, and you've had projects in the background, no doubt, building in preparation for that milestone. But given the market cap that Cardano now sits at, I think it's around, just under 100 billion. So still some way behind Ethereum, but given that its adoption has been very minimal at this stage, primarily because smart contracting has not been enabled. That there's a lot of weight being put on this particular project, isn't there? But you expect, in terms of your visibility of what people are preparing to release, you think that it is going to actually deliver?
Yeah, so I mean, definitely, any new project, Cardano is being new, but the functionality, smart contract functionality is new. It's going to be new for a while, and it has to build a track record to actually build an ecosystem, for instance, like the one that Cardano has. The one that Ethereum has. But Cardano, what I'm just going to say is that what we see in the back, there's going to be a flood of projects actually coming out on Cardano, and these smart contracts were going to be put to the test, but this is all very positive. And now talking about flipping, between the second and the third spot, I think that's a bit of a stretch actually, even from my trying to be a bit of objective judgment in this call, but you never know. This is crypto world. If you look at the coin market cap from 2014, which you still maybe remember from your early days, it looks very different than it looks today. And besides Bitcoin and Litecoin, there is nothing in the top 20 that was there 2014 that it is now. So anything can happen now.
Okay, and if we look a little bit further down the list for other potential Ethereum competitors, Polkadot earlier in the year had been very strong, a lot of expectation around that project, but more recently, and especially in the last couple of weeks, Solana's really kind of had a bit of a pump up here, and it's now last week overtook Polkadot in the leaderboard. So do you have any thoughts on that project in particular, Solana, and what this might mean?
Yeah. So in terms of the comparison, I think, they're trying to address two different problems, like high level up. Polkadot is really referring to multi-chain functionality, both in terms of the facilitating data validation, but also in smart contract functionality and near comes that as well, Cosmos as well. They're kind of like in that bucket. Solana, I think they really took advantage, first of all, of a very strong backing by a very big crypto exchange, FTX, and a market maker in the back, Alameda. So I think that's, the first driver, how it kind of evolved over time. And likewise, to be very blunt, I mean, Ethereum is still suffering from the fact that, one transaction costs you like 15 to 30 bucks. I mean, this is unsustainable. And Solana is capitalizing on that, especially in the context of the NFT bubble that it's here, and it is a bubble. And, also we see a flood of projects coming out that are NFT character that are going on Solana. And I think this is where a lot of the hype from two different bubbles are maybe, contributing to the price. Now, I don't want to actually kind of degrade the value of Solana by saying it's part of the bubble environment, because that's going to be a driver why a lot of new projects and technology is going to build on top of that, and what survives in the long term survives, and that's going to be normal.
Well, it was interesting. None of these things, obviously primarily either getting hyped around NFTs maybe at the moment, but also the continuing DeFi story. Obviously, kind of big pieces, I guess, relatively big pieces of news last week that we saw was from the SEC. New chair Gary Gensler is kind of he's definitely got crypto and DeFi in particular in his sights. And SEC last week announced that they are taking a closer look at Uniswap Labs, the development arm that delivers and maintains the Uniswap DEX. The markets didn't really react to that. Is this just kind of the first shot across the bow, as they tend to do? We saw that through the kind of, when there were question marks around the whole ICO bubble, and then the SEC came in and started, making some high profile engagements, let's say, with certain projects to send a message to the market. Is this what we're going to see here? And should the market be reacting more? I mean, should it be showing some level of caution around this? Yeah.
So personally, I think when it comes to the price action, I don't think there will be a big impact on it. Now, going back to the reasons why, I think as first, just want to say on a personal basis, I'm a big believer in decentralization. Over time, every financial service tool or product will be decentralized, but it's a long way to get there. And Uniswap was kind of the first step of building that foundations and infrastructure in the long path that we're going to get there. Now, in terms of I just can first compare the two perspectives, the Swiss one and the US one. The Swiss one has a very advanced regulator and a very advanced legislation, and building decentralized infrastructure is very clear that it's not part of the traditional financial market infrastructure that requires licensing or heavy regulatory oversight. So this is in Switzerland. I think decentralized applications and protocols are very clearly defined, and a lot of projects therefore don't have problems with the Swiss regulator. Now the US regulator is very confused in my view, or has many different entities that have to interact to come to an agreement. And now talking about where the regulators are very sensitive, and if you read actually the statement from the commissioner, it was about financial securities. What they don't want is actually having securities being put on a trading venue, exchange, AMM, however you want to call it. They don't want to put it there and then people trade that. So that means like your bonds, your stocks and things like that. They don't want to have that. And Uniswap actually made first few steps in that direction. They kind of delisted, if I can call it that way, anything that resembled a security token, from basically the liquidity pools are still there because you trade it, but kind of like it's non-visible, And I think this is kind of like the reason why, there's a strong reaction, is because regulators are very allergic to financial securities being in an unregulated environment that they don't know what's going on. Now, I think, this investigation that you referred to is part of our industry sweep. So usually what the regulator does something called sweep letters. Basically, they send information to everyone and say, I want to learn more what's going on. Meaning there is no case at the moment against Uniswap Labs, but any other, protocol that I know of at the moment. But that doesn't mean things might not change in the future. And kind of thinking way further into the future, decentralized applications will be regulated at some point, especially if you trade financial securities. But that's not the case at Uniswap. We're trading crypto there, and that's how it's going to stay. Therefore, I would be super bullish on Uniswap, actually.
So there's something, we talk about decentralization and unstoppable code, but you have, teams maintaining this code and developing this code. So, how decentralized are these things? And if regulators really want to go after someone is this, is showing their intent that the developers and the development teams are the people with the targets on their back.
Yeah. I mean, definitely, as you say, they're very easy target, especially because this is a small industry. And if you do anything of value, you become a superstar pretty much very quickly. So in that sense, I think they are a very easy targets, especially because developers by nature are not market infrastructure and legislation experts. So I think there's going to be a huge cost associated with part of these investigations, especially maybe not on the teams, but on their costs and resources they have to put in place to discuss these things with the regulators. But, as you mentioned, they're fairly easy targets because they are known. Anonymity is valued in the crypto space and it makes sense, but sometimes it's just not feasible. So, but I'm still very bullish on this decentralized protocols, applications, Uniswap in particular as well. And hopefully, once this sweep is over, they're going to move in the right direction and kind of release more things, especially around the version 3.
Yeah, well, I guess maybe one path that it could take, and we're seeing maybe look at a project like Aave. I know it's been slightly delayed, but they're, I think, imminently due to launch their institutional lending products. Aave Arc, I believe it's called. Obviously, them being ahead of the curve and having predicted that these issues would arise. And essentially the same technology, but with a KYC component on it. So anyone that's, providing liquidity within that particular pool can show that they've been KYC'd and feel comfortable that they're being compliant in some way. I guess that's where the industry will start offering these options. And, the question will then be, who's responsible? If they provided the options and the tools for people to be compliant, surely it comes down to the responsibility of the user to take the option if it's there to be compliant, and not the actual responsibility of the developers then to necessarily maintain oversight themselves. But that will be, I guess, a future question as well.
Yeah, I think, in terms of institutional investors, how I want to call them, usually the pressure to actually implement compliance procedures comes from the end investors, because they will tell you, well, we only chip in sizable tickets if you have the things put in place that I would see if I would invest into a mutual fund. Maybe I'm like a bit pushing it, but that's basically the case where the pressure comes from. I think now in terms of where all the action is and where all the exciting things happen is usually at the edge. Kind of, you cannot be too rigid, but you don't want to be too flexible. And kind of the players, institutional players in the crypto space that can take advantage of that is usually proprietary trading firms, because they manage their own capital. They can deploy it kind of in line with the processes, but pretty much wherever they want or wherever they decide. And I think that's going to be like the institutional sweet spot going forward. Prop book and having capital on your own balance sheet, where you don't have, when you can basically decide which kind of risks you want to take, and maybe not all of them, but I think that's where it's going to be the sweet spot. And kind of trying to serve traditional structures is just not the right fit, maybe, really long term. So maybe kind of combination between something like Enzyme Finance, former Melonport, together with Aave, together with Uniswap. I think that could be an interesting combination within the next couple of years for institutional players who want to be very crypto native. So that's how I would say.
Yeah. Well, I guess, as you mentioned, especially around the SEC, I mean, their purview is really around securities, or what's deemed or could be deemed as securities. And we have a lot of, I guess, regulatory fragmentation, let's call it, in the US, and different regulators taking different positions or wanting ownership of the assets as well. Earlier in the year, we did see some positive news out of the US when the Office of the Comptroller of the Currency, the OCC, permitted or decided to permit national banks to offer custody services for crypto assets. We've just seen the first rollout of the first bank, I believe, Vast Bank, a small local bank in Oklahoma, I believe, is where it's located. They've just released their crypto product. So I guess that's one positive side, that regulation is actually enabling banks, the traditional banks, to roll out these services. It's not all bad, and regulators, aren't all evil people. So that's a good step. Another piece in the news this week, I guess from earlier in the year, that caused a lot of excitement, but about to happen this week, was out of El Salvador. Earlier in this year, a lot of excitement within the community that when they announced that they'd be making Bitcoin legal tender there. Yeah, there's some, I think it's being rolled out this week. There was some surveys carried out, maybe, and there's even been some protests around the subject in El Salvador, maybe not being received by the locals as positively as the broader crypto community globally. What's your take? Do you think this is going to be a success, or some people are saying, you know, it's been attention grabbing? It's not necessarily going to be offering any real value to businesses and individuals in that country?
Yeah. So I think in terms of the international global impact, it's going to be very small because El Salvador is not an expert import powerhouse, you know. So I think the impact that it's going to make the most is actually within their community and within their citizenship, right? So if you kind of take a closer look, and I'm not an expert on El Salvador, but when you read about it, I think more than majority of the population is unbanked actually. So then even have access to basic financial services. Now, what the crypto technology and Bitcoin enables them to kind of get their wallet, you know, or account where they can actually manage their daily life and be protected maybe from, movements in the not necessarily for El Salvador, but for other countries, movements in their own native currencies, fiat currencies, which can be something very devastating for the population. So I think the impact will be very much local. I think there are a lot of other countries of similar character and scope and size will follow that same process. But I think, you know, I always go back to something that I heard our kind monetary institution in Switzerland say many years ago, is that they don't want the end public to touch what people call today CBDC, meaning they don't want the native public to touch cryptocurrencies directly. They see the blockchain technology, they don't focus on cryptocurrencies, and CBDCs, central bank-backed cryptocurrencies. They actually see that as a tool and infrastructure for wholesale markets. So it means for bank to net out that position and actually move currencies, but they don't want the retail to touch it actually. So I think kind of moving further towards bigger countries, I think there will be a huge competition and huge challenge to do that. In Switzerland, you can, I mean, I'm here in the crypto valley, I can walk around and pay with my Bitcoin, and it's a huge achievement. But I think, you know, the competition between currencies, no government wants that, because part of national sovereignty is actually to control your own currency. Mm-hmm. So it will have to align all of those different interests to kind of scale digital assets and coins and tokens, you know, globally as time evolves.
Yeah, I guess so. But then if you look at China, who have kind of been first out the gates with their central bank digital currency, that is something which is available to the general public as well. So, and if you know, we all know and understand the reasons why kind of Western central banks might want to kind of, you know, maintain as much control as possible still. But if in China, you know, a system of being something that's a bit more liberal and a bit more public proves a success, then, you know, this is where you get competition between nation states, and maybe they do need to kind of go down a path they don't originally intend. But that is the first time that's happened, I guess.
I mean, absolutely. I think that you now made that a very clear exception, you know, to the case that I was trying to make. And I think, you know, I'm just really fascinated how in China they manage their assets and finance. I mean, everything is done over phone. I think WeChat is pretty much a gateway into anything finance related. And there's a very, I think the reason why this is the case, why the government enables the public to touch digital assets directly, is because they have a very close collaboration, let's say it like that, with the tech companies that enable that, you know. So it's part of an ecosystem that's very close to each other, where there's not a lot of maybe competition between the tech players, but they're more kind of pieces of a bigger puzzle that China is putting together actually to enable the next phase of growth when it comes to building a cutting edge financial infrastructure.
Yeah, absolutely. Well, you know, this one's going to play out over a number of years, I'm sure. So there'll be plenty of opportunity for you to come back and review it again, but we'll get you back in a couple of weeks' time. Thank you for joining us, Anton. You have a great week. Happy trading, successful trading to you and your team.
Thanks a lot, Paul, and greetings from Crypto Valley, and wishing everyone to stay liquid.
Cheers.